Alright, good morning guys. I'm so excited to make this video. Alright, so today the video is going to be on how to manage different asset classes. Alright, just a disclaimer guys, this video is not telling you which asset classes to buy. This is just showing you how to use a spreadsheet and the correct apps to manage your portfolio correctly. Alright, so the timestamps in the description below. First, we're going to start off with the basics on how to use the spreadsheet. Then later on, we're going to do actually how to rebalance using the spreadsheet, and I'm going to give you guys 3 examples. Alright, so the first thing we're going to want to do is go down in the description and click the link there to open the spreadsheet. You're going to want to click File and make a copy. And while you're at it, you might as well smash the like button. Anyways, back to business. So once you make the copy, you're going to get my customized version of it, and this is how it's going to look. So there are 3 sheets, so asset class, holdings, and we have 2 more pie charts here, and stocks. So the main 2 spreadsheets you're going to be using are the first one and the second one. So what are we looking at? So I made this video so it can be used by people that are not as computer literate as the younger generation now. So let's just go through. We'll have the different categories, US stocks, international stocks, all the way down to commodities, right? We have the Rick Ferry rule. You really don't need to use that, or personal capital rule. The original author had those in. Alright, what's important now is your targets, your set targets. So for this example, we have US stocks as 50% and the lowest international stocks is 5%. The actual percentage now is the actual amount of percentage of your total portfolio that's actually in US stocks, for example, 33. And the difference is between your target and your actual. And as you can see, it's 16.48% difference, which is minus because it's actually less than what it's supposed to be. And threshold. So you might be wondering, why are these in red? So if you look closely, the threshold is 15%, but this is the difference is minus 16.48%. So it's a really simple way. When it turns red, it just means it's past your threshold. And you can really set your threshold to whatever you want. You could set it to 5%. So if I set it to 20% right now, then it wouldn't be in red because it's only minus 16. So we leave it at that. And then we have current value. Alright, so the current value is correlated into the next sheet, where you have a drop down menu and you pick the asset class. So every time you have US stocks here, it's gonna come up onto this spreadsheet and the current value. And similarly for international stocks, any international stocks you click is gonna end up on this spreadsheet on the current value, and the same for all of them. And then for perfect allocation now, so this is very important when you're actually rebalancing now. So when you have your perfect allocation, it's basically this your target. So this will be 50% times the current value, the total current value. So it would be D5, which is this, your target times your current value. So this would give you how much money would be there if everything was perfectly imbalanced. So for example, the US stock 50% times that will give you about 3 million. And if you look on this pie chart, this is the same thing as perfect allocation, except that it's just given in percentage form, so it's really easy to visualize. And portfolio allocation is simply the same thing as the actual percentage. It's just in a similar visual form, and as you can see, it also correlates with the current value. So yeah. Alright, so moving on to holding sheet. Alright, so we have the symbol, and when you put the symbol in of the stock, this automatically is gonna come up. You pick the category, you type the amount of shares, and the price will automatically come up with also the value. The portfolio percentage is also automated. However, for some reason, you need to type in the expense ratio. Alright, so for this example, we're having a portfolio of index funds. These are ETFs, and we have a mixture of US stocks, international stocks, REITs, and alternatives, right? So what you want to do, you want to type out all the symbols that you purchased. In this scenario, individual trades are put in, but you can just put the total shares because it's just the current value. As you can see, the price is just today's value. Then you type in US stocks. Then you go on to your other. Oh, and right here you see the sum is really important. So that this is the sum of all the VOO. This would be the sum of all these international stocks right here. Same for the small cap stocks. It's all automated. However, the expense ratio is different. And this is the total right here, correlates here. And mid-cap stocks, total correlates here. VNQ, total correlates here. Developed market stocks correlates here. And right here we have the total market equity, which is the sum of all of these asset classes. So 2.4 million. And you can also put bonds and cash. If you don't have a bond ETF and you just have commercial bonds or treasury bonds, you can literally just type it in and just type in the value. Similarly for cash, you can just type it in right here. And this would be the total amount of money you have overall, which correlates to over here. As you can see, it's the same values that will come up here, right? So it's really easy to just have it here, just to type it. All right, so now we're moving on to my customized part. So very similarly to asset allocation over here, instead of all the asset classes though, we're just doing the equities we have. So this is the current market value. As you can see down here, the current value of the large cap, which is represented by VOO, the S&P 500 index fund, we can see it's the same value as here. This corresponds right here. We have it in percentage form again, and similarly for all the other ETFs here. So this is the current value, which is the current market value. We have our target percentage, much like before, which correlates to this spreadsheet. Same target allocation, just like in the spreadsheet before. We have our difference, which is the difference between the target and the actual, which corresponds with this spreadsheet. And we also have our thresholds. Again, we have perfect allocation, which is the perfect target divided by the total market equity. You can see it's this field times this field. And in this scenario, they're very quite similar. Alright guys, so now we're going to do an example of how to asset allocate. I just kept it really simple for you. So we're using the same target allocation model as the previous example. However, the current market value has changed. So for some reason, the large cap stocks have done really bad and their market value has gone down significantly. So when their target was 55% originally, it's gone down to 32%. No need to panic, but the difference is in red, so it's past our threshold. It's 23% less than it should be. But however, mid-cap stocks have done pretty good. They're 7% more than their target 15%, with the threshold at 5%. And similarly for the small cap stocks, it's very similar. So how we're going to go about this now? So the first thing we're going to do is you have to decide if you want your current market value to go perfectly with your target allocation, because you can do two things. In this instance, where it's quite below the target, you can make it perfectly in line with your target allocation, or you can make it more, maybe like 10%, 15% more. But for our example, we're going to keep it simple and just create the current market value perfectly with the target allocation. So how we're going to go about doing this now? Right, so now what we're going to have to do is look at the perfect allocation. We can see that it's significantly more than the current value. And for all these stocks here, we're going to have to allocate it. So how we're going to do this is very simple. We're going to just type this column as different, and at the end of the video, when I send you guys the copy, it's going to have this. So it's just the difference between this minus this value, and we're going to autocomplete it. And so this is the amount of stocks, the difference in money. So the ones that are minus would mean you would have to sell that amount, and the ones in positive, we're going to need to buy that stock. So right here I have the current value of each stock. So for VOO it's 270, and all we're going to do is we're just going to divide, so equals to this field divided by the share price. And ignore this, this should not be dollars, it should be numbers, decimals. Let's do numbers. Right, and for all of them we're just going to do that. So it's equal to this field divided by that share price, and the same for all the fields. So you guys understand what's going on. Oops. I just wanted to make sure everyone knew what was exactly going on. That's why I'm doing it manually, because I could have just auto-completed it if I really wanted to. Right. Alright, so now we're going to be doing the actual trades. So we now have the actual stocks shares to buy. And what we're going to do, we're just going to copy this and put it in a notepad right here. And the reason we do this is because once you start executing the trades, your current value is going to change here, and it's going to kind of confuse you. So it's best to just put it in a separate document. And now you're going to be doing a little work. So you're going to want to execute these trades on your trading platform, or if you have a broker, you tell them this is the exact amount you want. So once you do that, we're just going to fill it in now. I'll give you an example. So we're supposed to do 1300 VOO. We'll just auto-complete it and it's in 1300. As you can see, the current value is going to change here. For IJH, we're supposed to do minus 15, 560, which would be selling. So we're going to do that. 60. And I'm going to do the rest off camera. Alright guys, we're back and I've executed all the trades. So VOO I bought 1300. For VWO I've sold 1200 shares. For IJR sold 1560 shares. IJH I've sold 560 shares. VNQ I've sold 400 shares. And IEFA I've sold 600 shares. So now I can show you my current market value is now perfectly aligned with my target allocation. As you can see, the current value and the perfect allocation is basically the same. The difference in shares is about 1 to 5, which is negligible. And we can see the difference in price from perfect and current is very, very low. And that's how you asset allocate for your holdings. Alright guys, so the last thing I'm going to show you now is in the asset class allocation sheet. So we're going to show you how to rebalance this now. So this is our current value, and as you can see, we are lacking in US stocks. We're only 25% and we need to be at 50%. This is our current market value, and this is our perfect allocation. So again, very similarly to holdings, we just use the difference, which this minus this, to get 1.3 million. So we need 1.3 million more stocks. So what we're going to do, we're going to take this value, copy it, and go into holdings, and we're going to scroll down to the bottom, and we're just going to place it right here just to show. And what we're going to do, we're going to add it to our current market value, right? So eventually you're gonna take this back out, but for now we leave it to make things really simple. So then once we do that, we do the same steps. We're gonna make our perfect allocation the same as this. So we have the difference, and we have our difference divided by the share price, and we're gonna buy this amount of stocks. So if you do that for all of them, you'll have the same ratio, same exact ratio. Each pie chart is going to be the same, but it's just going to be an increased amount. So fast forward to that, let's just pretend that we've done it. So you've executed all the trades. So let's say you've done that now. In terms of your bonds, same thing. Look at the difference. So we need to sell 660,000 because we're at 35% and we should be at 25. So you go into your holdings and you either sell your bonds or you sell your bond ETF, which it could be placed within this pie chart as well. But for this example, we're just gonna minus it. So we're gonna minus 660,000. Right, and the last thing is just cash, and you can see we have 500,000 worth of cash. So the thing with cash is you can use the cash and you can put it back into the US stock, or you can put it back into bonds, alternatives, whatever you want. So all you would do is you would subtract the amount of cash and you could add it to your stocks, and you could add some to your bonds. As you can see, you're still 5% less in your stock, so you could add it to that, or you could add it to your bonds. And basically, yeah, that's how you asset allocate, guys. If you have any questions, just put it down in the comments or message me directly. I want to thank you guys for listening. So if you guys are wondering how to add another category, you can literally add any category here. what you have to do is go to your asset class and insert a new column. You can just call it new asset, and it will come up right there. If you want to know how to edit this, you right click this column, click data validation, and the criteria is from a range, right? The range is being taken from here to here. So if you insert a new row right here, it'll just be added to the data range, and that's how you add another asset class. Alright guys, cheers.